All right, for all of you out there prepping for your competitive exams, you're going to want to pay close attention to this one. Today, we're diving deep into a really big shift in India's rural finance world, NABARD's ambitious plan to drag our cooperative banks into the digital age.
Okay, let's just start with a number. 13%. Right now, that's the slice of the agricultural credit pie that cooperative banks hold. Now you might think, hey, that's not zero, but trust me, when you see where that number has come from, you'll get why this overhaul isn't just a good idea, it's absolutely necessary.
So, here's our game plan for today. First, we'll tackle what I'm calling the co-op bank dilemma. Then we'll get into NABARD's brilliant solution, something you need to know called the SSE. We'll unpack what that actually is, see how the RBI just gave it the official go-ahead, and then wrap up with the key takeaways you want to lock in for your exams. Sound good? Let's do it. Okay, part one. Let's really get to the heart of the problem. Why are these banks, which were once the backbone of rural India, falling so far behind the curve?
And this right here, this visual tells the whole story. Just look at this trend. Back in 2003, co-op banks had a solid 34% share of farm credit. Fast forward to 2016 and it's down to 19%. And today, as we saw, it's just 13%. This is a huge, steady decline. So the big question is, why is this happening?
Well, the answer really boils down to one word: technology. And this comparison makes it crystal clear. On one side, you've got the commercial banks with the whole shebang, UPI, slick mobile apps, top-notch security. And on the other, you have the co-op banks. Many are struggling with just basic systems, and they're way behind on the digital services customers just expect these days. It's this tech gap that's making it almost impossible for them to compete.
So we've established the problem. It's a big one. Now let's pivot to the solution. NABARD didn't just sit back. They came up with a very clever, centralized fix to tackle this system-wide issue.
And this is it. This is the key term for your notes: the Shared Services Entity, or SSE. So what is it? Think of it as a central tech and operations hub for all cooperative banks. Instead of hundreds of individual banks trying to build their own expensive digital platforms, the SSE builds one powerful platform and everyone just plugs in. It's a game changer. So what does this model actually deliver? Well, first and foremost, customers finally get the digital banking they want. Second, the entire system gets a massive cybersecurity upgrade. Third, it makes all the behind-the-scenes work way more efficient. And finally, and this is a big one, it lets them hire the best tech people centrally, something a small rural bank could never do on its own.
Okay, this idea of a central hub sounds great on paper, but let's dig a little deeper into how it actually works. Because when you see the numbers, you'll understand why this isn't just an improvement, it's a revolution for these banks.
The whole SSE model really stands on three main pillars. Pillar one is technology, obviously. This is the core banking software, the mobile apps, the cybersecurity. Pillar two is operations. This means centralizing stuff like loan processing and audits. And pillar three is support. Things like buying IT equipment for everyone or running training programs. It covers everything.
And here is where it gets really interesting. This is the magic of what economists call economies of scale. Just look at these figures from NABARD's report. For one bank to set up its own cybersecurity center, we're talking about 2 crore rupees. Through the SSE, because they're sharing the cost, it plummets to just 5 lakhs. Look at the total. It goes from over 6 crore rupees for a single bank to under 1 crore. That is the incredible power of pooling your resources.
So you take all those savings for every single bank and you add them all up. What do you get? You get this. NABARD estimates that by the 5th year, the SSE could be saving the cooperative banking sector nearly 3,000 crore rupees every single year. That's a massive amount of capital that can be reinvested into growth.
Okay, so the plan is brilliant. The numbers add up, it solves a huge problem, but there was one massive hurdle. The big question was, are cooperative banks even legally allowed to put their money into a brand new company like the SSE? That question brings us to the second half of our story, which just unfolded very recently.
And here we go. We're shifting gears now from NABARD's amazing concept to the official action from the Reserve Bank of India. This is the moment the idea became a reality.
For your exam notes, remember this date, September 26, 2025. This is when the RBI issued the circular that officially gave the green light for the SSE. This is when the plan truly got off the ground.
Now I know this looks like some dry legal jargon, but it is so important. By adding this one little line to the regulations, the RBI officially put share capital of the SSE on the list of things that co-op banks are allowed to invest in. Basically, the RBI said, yes, you can buy shares in this new entity. This one sentence changes everything.
And they also set a very clear limit. The circular states that any cooperative bank can invest up to 5% of its own funds, that's basically its core capital and reserves, into the SSE. It's a clear guideline that encourages them to join in, but also keeps things financially safe.
But wait, there's more. The RBI didn't just give permission, they also granted two really crucial exemptions. This is a big deal. First, this 5% investment won't eat into their other investment caps. And second, they waived the rule that usually stops these banks from investing in unlisted companies. The RBI basically didn't just open the door, they rolled out the red carpet to make it as easy as possible for banks to participate.
Okay, we've covered the problem, NABARD's solution, and the RBI's green light. Let's wrap this up and boil it all down into the absolute must-know points for your exams.
Here it is, your cheat sheet. First, the problem. A huge drop in market share, from 34% down to 13%, all because of technology gaps. The solution? NABARD Shared Services Entity, the SSE. The main benefit? Huge cost savings thanks to economies of scale. The regulation? The crucial RBI circular from September 26, 2025. The investment cap? Up to 5% of their own funds. And finally, those key exemptions from non-SLR limits and unlisted security rules. Lock these points in.
So we end on this big question. The plan is smart, the numbers work, and now the rules are in place. Is the SSE going to be the silver bullet that finally brings India's cooperative banking sector into the 21st century? We'll have to wait and see, but for the first time in a long time, the path forward is clear. Thanks for joining me for this explainer.